All right, here we go.
All right, guys. What's up, guys? My name is Tai Zen. Welcome to the cryptocurrency.market channel. On this channel, we focus on helping traders and investors grow their portfolio to a 7, 8, 9-figure portfolio and how to manage it correctly. And with me today, broadcasting from Dubai, I got my business partner and fellow trader and investor with me, the Honorable Grandmaster, legendary, world-renowned LeonFu.com. Say hello, Leon.
Hi there.
Yeah.
Hi from Dubai.
Okay. So in this video, since you have an economics degree, right?
Yes, I do.
Okay.
Yes.
Since you went to school for economics, and can you explain to our students, right? The Fed is currently increasing their interest rates.
Yes.
They have increased it by like 4 times already.
That's right.
So let's just start from the beginning in case someone is not good with economics like I am, So can you start with why the interest rates were so low, near 0% for so long?
Yes.
And then why they're increasing it now?
Yes. Okay.
And then at the end, we'll talk about how it affects our decision when to buy back into the crypto market.
Sure.
All right.
Sure. Yeah.
So I'm fucking jet lagged as shit, so
Yeah,
I'm gonna listen. Okay.
Yeah, so it was a long flight to get here. But so interest rates, as most of you have known, have been at 0 for over a decade now. Okay. So it's why that if you put your money in the bank, you haven't gotten any money for the last 10 years or more.
Okay.
Right? And so obviously has been inflation in the last 10 years. Things cost more today than they did 10, 15 years ago. But interest rates the government has set interest rates at or near 0, even negative. Some European countries had negative interest rates.
Can you clarify what type of interest rate are we talking about here? Are we talking about like the interest rate? So when I go into the bank to borrow money to buy a car, buy a house, to start a business, what kind of interest rate are we talking about?
Okay, so we're talking about the interest rates set by central banks. Okay, so all the other interest rates, the interest rates to buy a car, the interest rates to buy a home, a mortgage, to go to school, everything is set based on the rate that the central bank of that country sets it at. Okay. And of course, being that the US dollar is the world's reserve currency, the Federal Reserve is the most important interest rate. Okay. Right? So back in 2008, during the Great Financial Crisis, when the entire financial system almost collapsed, right? And of course, everyone, we know of Lehman Brothers, right? It was like they let Lehman Brothers fail, and because there's so much leverage in the system, that would have bankrupted the entire financial system. Okay. If the government, if the government didn't bail Wall Street out, right? Okay. And Bitcoin was born out of that, in fact. Okay. All right. So the way the governments responded was they cut interest rates to 0, or almost 0, right?
When you say that they cut interest rates to 0, okay, 0 for who? Because I don't remember any of my friends or you getting 0% interest rate when you go buy a house or buy a car.
No, it's not. No, it's not 0, but it's a lot. It was lower than it had ever been.
Okay, right? But for who though?
For the people, for the banks. Okay. That can borrow at the Federal Reserve discount window.
Okay, so it's for the banks only. It's not for the individual retail people like you and I.
No, but that rate affects our rate too. Okay. All right. So it was the central banks, the Federal Reserve had set it to 0, and they've tried to raise it, but every time they do, something happens and then they cut. Right. So rates have been at 0, and they have been able to get away with it because inflation, based on CPI, has been, relatively low. Okay. Now, of course, we know that inflation, that's not a real number. Yeah. But regardless, that's the number that
everyone has to go by.
That the Federal Reserve and the central banks go by. Okay. Yeah. Okay. And the past year, inflation has gotten way out of hand. Like we all see that.
Okay.
Right? We see that from the coffee we're drinking to the gas at the pump.
Yeah, this coffee is what, about $7 here in Dubai?
$7 in
at this
Dubai.
hotel?
Even in Starbucks in San Antonio, it's $5. You know? I think it used to be $3.
Yeah, and the price of coffee that used to be like in Thailand and Vietnam, they have gone up by over 50%. In Vietnam and Thailand.
So clearly, even by the manipulated numbers, inflation numbers, even that's over 8% now here in the U.S. and that means the real rate is probably double digits. But of course, inflation's a very personal thing. It depends on what you spend money on, how you live, your lifestyle. So we all experience inflation in different ways.
So basically, the interest rates were kept low so that the Federal Reserve or the central bank can help businesses borrow money at a low cost. Or help the banks borrow money at low cost so they can loan it out to businesses and individuals.
And it also forces investors to take on risk because you're making, if you can just park your money in the bank and get 4 or 5% like you do now, well then why are you buying stocks? Why are you even buying crypto, right? It was also, it's two ways. They want you to either spend the money or speculate in the markets.
To buy stocks or real estate or something.
Estate, whatever, right? And the idea is that, the money parked in the bank, they're trying to force economic activity, right? Because if the money is just parked in the bank,
it doesn't help the economy.
It doesn't help the economy. The economy is not doing anything if the money just sits in the bank, making 4 or 5%. Right?
So basically, the central bank has kept the interest rates near 0%, and you said that in some of the European countries, they have even gone as far as to keep it at a negative interest rate.
That's right.
So they're paying you to borrow money from them.
That's right.
Okay.
That's right.
So that happened from 2008 up until when, like 2020?
Well, so I don't have the chart in front of us, but every time they tried to raise rates, a crisis would happen. Something would happen. Like there was a slowdown, or there was like in 2019, before the pandemic, we had a repo crisis. Where the repurchase agreement, which is the rate banks lend to each other. Like because the way banks work is, they have people depositing money, they have people taking out money. So when one bank needs extra cash because they have like their depositors want their money, then they might need cash, right? So they would have to go borrow from another bank. So the repo markets are one way that is what banks charge each other to borrow from each other
without going to the central bank.
Right? So that rate started spiking. And then the Fed had to intervene in that, and that was before the pandemic. And of course, when the pandemic hit, then it just went wild, right?
So basically, they tried to increase the interest rate and not keep it near zero. But each time they tried to do it,
something would break.
Some economic crisis would happen. And they were forced to continue keeping it low.
They were forced to continue keeping it low. And then the big granddaddy, of course, the pandemic happened, and then the money printer, the meme was money printer go burr, right?
And so
because they practically they doubled the balance sheet. They printed trillions of dollars.
They doubled in 230, 40 years of U.S. history. They just printed 50% of all the U.S. dollars on the market in just like less than 2 years.
And of course, we still didn't see inflation at first, right? But now it's been 2 years later. That's why we're starting to see. Well, you just doubled the money supply, basically. And now, everything from the coffee we're drinking to the gas that we're putting in to the, home prices have exploded. Right. So it's out of control. I mean, even with there's no way they can manipulate the inflation numbers anymore.
Because it's so obvious.
It's so obvious, right?
And just so that our students know, right? What is the target inflation number that they want? Like, what is the ideal number that they want?
The Federal Reserve has, by Congress, has what we call a dual mandate. Right. Their target is to keep inflation at 2%. And full employment.
So mandate meaning for the students that that don't speak English as their first language, mandate means that's their responsibility.
Yes, that's what the government, the Congress, has told the Federal Reserve. This is your job.
Yeah.
Your job is to keep inflation around 2%.
Yeah.
And not have full, what they call full employment. Full employment means that everybody who wants a job has a job or can get a job. Right? So it doesn't mean zero unemployment, because some people just don't want to work, right? It just means if you want to go get a job, that there is a job available for you.
Okay.
Right?
So basically the government is saying, hey, we will allow you to print the money,
yes,
but you have to be responsible for these two economic numbers.
Yes.
One is a 2% inflation and full employment.
Yes. So it's not the stock market. It's not it is the stock market. It's not accurate to say that, because they're also responsible for keeping the financial system, operating in an orderly way, right? If there's, like the pandemic happened, right? They had to bail everyone out in order to, keep the economy
So if you print more money, 50% of the U.S. supply of U.S. dollars, then that's going to dilute the amount of U.S. dollars on the market. So before, it would cost me $3 for a cup of coffee, and because it's diluted now, I would need like $5 or $6.
But we didn't see that at first. You don't see it in the coffee first. You see it in the stock market. You see it in the real estate market. We saw it in the crypto market. It was a life-changing amount of money. Right? But now it's starting to hit the coffee.
And why is there a delayed response to the money printing like that?
Well, because
for the consumer products that we consume.
Because if people get a whole bunch of money, it's not like you're going to drink more coffee because there's more U.S. dollars, right? So what are you going to, if you come into a large amount of money, what are you going to do with it? You're going to go buy a home first. You're going to go buy like a car, right? Cars have exploded. Or you're going to go buy stocks.
Go buy jewelry.
Yeah, you're not going to buy 3 cups of coffee just because
you have extra money.
Right? Or you're not going to go buy food. But now they've printed so much money. And it's been, like 2-3 years now since the pandemic. Now that's starting to filter through.
To the consumer products.
Now it's very obvious. It's like the meat. The groceries at the grocery store. Right? So when that happens, they can't allow that to happen, because who gets hurt when that happens? It's the people who work for a living. Right? It's the people, because their salaries are not going to keep up with that.
No. Right? The cost of the coffee has increased by 50%, some places 70-80%. But your salary has not increased.
Now, if you were invested in crypto, if you bought real estate, if you had stocks, then your stocks and your real estate and your crypto went up 50%, 100%, even 10 times in certain cryptos, right? And so if you're in that situation, well, you may not care that your coffee is double the price now, right? But that's not the majority of the people. The majority of the people live paycheck to paycheck. Okay? Like, I don't know, I don't have the statistics, but most Americans have no savings.
I read somewhere that like over 50% of Americans have less than like $1,000 in savings.
So when they go to the grocery store, when they go out to eat, they're seeing that their paychecks is not covering the cost. Right? Now, as investors, if we just made 10 times our money in our portfolio and we're now paying 2 times more for our coffee or our meal, not a big deal. We'll take that, right? We'll take that. But we can't let that happen, because politically, if you have the masses of people, their paychecks just got cut in half, that's going to cause problems.
The leaders are going to be in trouble.
The leaders are going to be in trouble.
So we understand why the interest rates were kept near zero for so long. Right? And now they've kept it there for so long that it's hurting the economy and it's creating inflation. And so now, what prompted them to finally increase the interest rates?
Well, politically, I think.
Okay.
I mean, you now have Congress, even the constituents, the voters are saying, hey, my paycheck doesn't cover my food bill. My food bill's going up. My utility bills are going up.
Yeah.
My grocery bills are going up, right? And, eventually, if the prices are going up, if the Federal Reserve doesn't raise the interest rates to slow it down, the market will slow it down because they'll just not be able to spend, right?
Okay.
So that prompted them to say, hey, we gotta raise our rates. Now, how does raising rates lower inflation?
Okay, explain that.
Well,
it's an abstract concept for many people.
Yeah. Well, the fact is, like, when you cut interest rates, what you're trying to do is get people out of the cash and either spend the money or invest the money. Right? And both of those things help drive the economy.
Okay.
Right? Both of those things encourage people to go spend their money, which increases economic activity, or go invest the money.
Okay, so a healthy economy is when money is moving.
Yeah, when money's
not sitting in one place.
Yeah. Well, now inflation's out of control. When interest rates go higher, then the reverse happens. Right? Now you're getting paid to just sit on your money,
to hold your money and not do anything with it.
And not do anything with it.
Okay.
And the idea is that destroys demand, right?
Okay.
It's like for both, like, if you are saving money, it encourages you to save, right?
Okay.
Because that money's making money for you.
Okay.
Right? And if you're an investor, well, you're not going to go buy stocks or crypto if before you got zero. Now you can buy a U.S. Treasury and get 4%, 4.5%. Right?
Okay, so let's just do an example so that our students can see what we're talking about, so it's more tangible.
Yeah.
Like when you and I retired from our day job in 2017, right? During the bull market in 2017, you took some of your money and you bought some U.S. Treasury bonds, just a small amount,
I bought
right?
bonds.
Yeah,
I bought bonds. Yeah.
And how much was the rate back then they were paying you?
You were lucky to get 2%, 3%. I mean, that was good if you could even find 2 or 3%. And that was not even a treasury. That was like corporate bonds.
I thought you were getting like 0.1 or something.
Yeah, it was almost nothing. Like to get 2 or 3%, you had to take risk.
Okay,
right?
so fast forward 5 years, now we're in 2022.
Yeah.
And how much can you get the bonds for?
Well,
how much are the bonds?
The bonds, it depends on the duration. If it's 6 months, 1 year, 5 years, 10 years, right?
Let's talk about 1 year.
Like a 1 year rate. Let's just say a 1 year rate, right?
Yeah.
So that's 1 year or 6 months or 1 year, right? That right now, I've seen it trading well over 4%, 4.5%. I saw it go up as high as 4.75.
So if I have, let's say, $1 million in cash, instead of speculating on the real estate market, the stock market, or the crypto market, where I can take the risk of it going down or up, right? Then I can just take that $1 million and buy the bonds with it and get 4%.
That's right.
And
that's 40 grand.
That's 40 grand a year. That's more than enough to pay for my living expenses in Vietnam or Thailand.
Yes.
So
risk-free?
Risk-free, because the U.S. government is not going out of business anytime soon.
That's right.
Now, a lot of people say they will, but you and I already know that as long as you have 11 aircraft carriers and 24 nuclear power subs and thousands of nuclear weapons.
As long as you're the world's reserve currency. You're not going to go. Yeah,
it's not going to go out of business in the next 12 months.
Because you know what? The fact is, if you want to do anything, you need U.S. dollars.
Yeah.
If any country wants to buy something from another country, like if Vietnam wants to go buy something from China, or wants to go buy something from Japan, well, Japan, or they don't want Vietnamese dong. Right? Okay. What do they want? They want dollars.
Right? So like in Vietnam, we export a lot of rice. We export a lot of seafood. So when they export that seafood, they want U.S. dollars for it.
They want U.S. dollars for it. Yes, that's right.
When they export that rice, they want U.S. dollars for
it. That's right. That's
right. So there's still demand for U.S. dollars.
Yeah. So there's always going to be demand for dollars as of now.
At the moment.
Right? And it would take something like a world war to change that.
Yeah.
Okay, which hopefully doesn't happen.
Yeah.
but so right now, people keep saying the U.S. dollar is going to collapse or something, and it will eventually.
Yeah.
Okay, it will. Like nothing lasts forever.
Yeah.
Right before the dollar, it was the British pound, and it was the franc, and it was it was all the reserve currencies do change.
Yeah.
But they don't change for no reason. There's usually some type of
big crisis
or event, or usually a war.
Yeah.
I mean, the times when it has changed, there's usually a war involved.
Yeah. And if there is going to be a war, I mean, regardless if people like it or not, the U.S. still has the most powerful weapons of war out there.
There's still no military that is going to take on the U.S. military, right?
Okay, so just a mid-video review here. We know that they kept you're saying that they kept the interest rates low for many years since 2008 to bail out the big companies, right? And they gave it to them at a low interest rate so they can stimulate the economy. But now, because inflation is climbing so high, they are forced to start increasing interest rates.
Yes.
And they've done it like 4 times already.
Yeah, it's at 4% now.
Yeah.
The federal funds rate. It was nothing. If you look at that chart, it's just been a straight line up. It looks like a crypto chart.
Yeah.
If you look at the interest rates, it was like zero or near zero for like over 10 years.
Yeah.
And then this past year, it like going to the moon. Right?
Yeah. So I've been, telling our students that we are going to wait until the Fed finishes increasing, not finish, but increase their interest rates a couple more times until the end of 2024.
Yes.
So they just increased it by 0.75 points, 3/4 of a point just a couple of days ago.
To 4%. Yeah.
And then they're expected to do it again
in December.
Yeah. And then they've done it like 4 times already. And then the one in December is going to be like the 5th or 6th.
Yeah, I'm losing count by now.
I'm losing count too.
Yeah.
But the reason why I'm telling our students to just wait until this is done, and then we will start buying a little bit of crypto at a time in January, which is Q1 of 2023, is because I don't want our students to suffer the drawdown, like the whiplash in the markets.
So there's 2 effects that are happening right now, right? One is when the interest rates go higher, the discount rate, the risk premiums have to go up, right? It means that if you were willing to pay, you were willing to buy a business, you were willing to speculate on cryptocurrencies, right? Well, obviously, if you can get more money now, risk-free, sitting in cash or sitting in bonds in U.S. Treasuries, you're not going to be as willing to pay up for a risk asset, right?
Yeah.
If you can get more risk-free, what does that do to the price of things that have risk? They need to come down, right?
And that's the reason why. So people are basically taking their money out of real estate, out of crypto, out of stocks, and putting it into the 4% interest for the bonds.
Yes.
And so when they pull money out of there, they have to sell it, causing the price of stocks, real estate, and crypto to go down.
Yes. So that's one thing. But the other thing that's happening is we're going into a recession.
Mm-hmm.
So the market has to come down first for the interest rate rise. Like even if nothing changes, like as long as the interest rates go higher, your asset is worth less.
Okay. So when you say your asset is worth less, before you talk about the assets being worth less, since you went to school for economics, can you define what is a recession when you were in college? Because right now they're trying to change the definition of a recession. So when you went to school, what did they tell you?
Well, even before we went to school, we said it was 2/4 of negative GDP. Okay. And we've had that. We had the first 6 months of the year, we've had 2 negative prints. So by our traditional definition, we are in a recession.
But the Biden and the U.S. is denying that.
I think that's because of the elections coming up, right?
Okay.
So they're trying to say, but the job market is strong, and the economy is holding up. The economy, like if you look at like how earnings are coming in, there's still plenty of jobs out there. Yeah, it's still very hard. If you go around, you see, we're hiring and nobody can find enough workers, right? So that's true, right? That part is true. but the economy is clearly slowing down.
And then what constitutes a depression? Because some people are saying that we could possibly go into a depression. So when you were in school, what constitutes
I mean,
depression?
a depression, we think of like the 25% unemployment, big double-digit unemployment, right?
Okay.
And it's the opposite of inflation, right? Like your businesses are closing,
multiple quarters of negative
growth. That's a depression, right?
Okay.
We're not in a depression. Like this is not a depression, right? But on the other hand, I think it's very clear we are in a recession. Most people would say that it's clearly the layoffs are happening. You hear all these big tech companies.
Yeah, Elon Musk just bought Twitter and he just
fired a bunch of people. But it's not just Elon Musk. It's Apple and Amazon. Like across the board.
Yeah.
So unemployment's going to be going up.
Yeah.
Now, is it going up high enough that the Federal Reserve will? Because remember, they have a dual mandate, and I don't think so. Not yet. Because because one thing the Fed seems to be doing is they're not looking ahead. They're looking at like the unemployment data and the CPI, the inflation reports that are coming up, and the core CPI, and those are all backward looking. Those reports are all lagging indicators, right? Because they're telling you what it was when those numbers come out. They're for what's happened in the past, the previous quarter. They're not looking forward.
Okay.
So a lot of people think that they're gonna overdo it, right? Because it's like you're driving and you're driving by looking out the rear view mirror. You're not looking out the front. They're looking out the back, right?
Okay.
So they're probably going to overdo it, and they're going to.
But you mentioned that a few days ago, Jerome Powell, the chairman of the Federal Reserve, he said that. Can you explain about? He said that he would rather over tighten.
Yes, because
he would rather increase the interest rates too high. Than not high enough.
Yes, because he believes that if inflation gets out of control, which means if people start thinking inflation is normal, and start factoring that, assuming you're going to have 8%, 9%, 10% inflation, then that becomes a self-fulfilling prophecy.
What does that mean? Let's say that we go for a year at 10% inflation.
If we go for like a year at 8, 9, 10% inflation, for let's say a couple years, let's say that happens, then everybody's going to expect that to keep happening, right?
Okay.
So
and why is that bad? Why is that bad for the economy?
People anticipate that, right?
Okay.
And so if you're working for a job, you're gonna ask your boss, hey, you got to give me a 10% raise this year.
Oh, okay.
Right? Because we know inflation's going. We know the prices are going up, right? And then the company's gonna say, hey, we got to raise our prices, right? So what Powell is trying to avoid is when what he calls inflation expectations, reach 8, 9, 10%, then people start behaving that's going to happen. And then it almost does happen because everybody's raising their prices. Right? And so he
doesn't want that to happen.
He doesn't want that to happen. And the way he's going to make that happen is he's going to put us into a recession. Okay. Right? He's going to slow the economy down, and so that make businesses basically start losing money. And then they are going to not be able to raise prices. And he'd rather overdo that, which means that he'd rather put us into a recession.
So let's look at both sides of the coin here. If inflation becomes the norm and that's what people expect, you're saying that businesses, products, employees, they'll start expecting a higher pay. The business will start selling the products raising prices. Okay, but what is the negative effects of him increasing rates and then hurting all these businesses?
Well, we're going to see we're going to see unemployment. We're going to see businesses close.
Yeah, because when the interest rate is higher, the businesses cannot borrow money.
Yes, or it costs more.
It costs more to borrow to expand their business.
That's right.
So they have to.
But that's what they want, though, to slow down. They want the economy to slow down.
Well, don't you think that sucks? Because like if I'm a small business, if I'm a mom and pop's, home family business,
so the mistake was was not starting to raise last year, before inflation started going up.
Okay.
Remember when
he said inflation was transitory, yeah.
Right?
Yeah.
Well, we all knew that was wrong, right?
Yeah.
We all, like, everyone thought, you got to be kidding me, right?
Yeah.
When, like, before we had 8-9% inflation went to 4%, 5%, 6%, and what was he saying last year?
It's transitory.
It's transitory. It's transitory. And people were saying, hey, don't you think you should start raising now? Like, we're already got 4, 5, 6%. And he was like, no, it's supply chain issues.
So they really don't know.
In Ukraine.
So even though he's the chairman of the biggest central bank, they don't
know what the hell they're doing, right?
Yeah.
We saw that coming. Everyone could say that. What? Like,
how come a high school dropout like me can have an idea that's coming, but this guy's supposed to be in charge of the Federal Central Bank in America?
I don't want to get into conspiracy theories, but there's a lot of things in life that happen, and the people in power, you say to yourself, they can't be that stupid. They can't be that stupid. Come on, these guys went to Ivy League schools, and if we can see it, like, and they're saying these kinds of things, like, maybe it's intentional. Maybe it's like
that's the only thing I can think of. If a high school dropout like me can understand that you are diluting the U.S. dollar by printing more money like
that's
that,
right,
and that it's not fair for you to bail out the big businesses while the small mom and pop businesses die out.
That's right.
Right?
That's right.
Then that, to me, that's just fucking easy to see.
Yeah.
So that can only lead me to believe that, one, these guys like Jerome Powell are completely incompetent, have no clue what they're doing, or they're doing it on purpose.
They're doing it on purpose. That's become my view. Is that when I see, whether it doesn't matter whether it's Republican, Democrat, or Jerome Powell, and or even like the mayor of Austin, Steve Adler, when you see these people do these things, and you're like, they can't be that dumb. Like the guy went to like an Ivy League school. They were at Goldman Sachs. They
understand finance.
They understand finance. You can't be a dummy and make it to that position, right? And you do these kinds of things. You're like, that's just part of. It's intentional. Like,
okay, so this channel is about making life-changing profits in the crypto market. So let's put aside what we feel or think about if these guys are competent or incompetent. Let's focus on when, because the biggest concern that our students have and our viewers have at the moment is they want to know, like, when is the ideal time to buy in?
Okay, so just like we don't know where the top is on the way up, we were saying, hey, you got to take profits, right? Even though the market's going higher, you got to take profits, right? And so the same thing applies on the way down. Right? I mean,
we don't know where the bottom is.
We don't know where the bottom is. Like, like even if we know the bottom and we buy it, how much are we going to buy? We're not going to like pick a bottom and put all our money in at that price.
So if we have 100,000, then every time the market drops a little bit, we buy 1 or 2,000 at a time, 1 to 2% at a time. So we're not going to buy the 100% at one time.
It's all about like sizing our position, right? It's all about like if you is how much profits did you take in the bull market? Which means that's how much cash you have now relative to what you already left in the market. Right? So how much you should dollar cost, how much, it really depends on, well, how much did you take out during the bull market, right? Because the more you took out during the bull market,
and the less anxiety you have about buying in right now.
Yes, or you can start buying in earlier because you got you have more cash. Right?
Like for example, you and I are definitely going to buy in earlier than our students will.
Most likely.
Most likely.
Most likely.
There's 1 or 2 students that have made more money than us. So they'll probably buy in at the same time or a little bit earlier than us. But the majority of our students are probably going to buy after us.
Yes.
Right?
That's
because they have a smaller portfolio.
They have a smaller portfolio, or if they start buying, they'll be buying smaller amounts. So you can either start buying in later, or if you want to be early, then just reduce your bet size. Right?
Okay, so let's discuss some tangible numbers because like if we talk about money and it's too abstract, then we start losing people. Let's just say let's run through several those scenarios. Okay, so in January 2023, we start buying in a little bit. Let's just say someone's new to the crypto market, brand new. They've never bought crypto before.
So they don't have any crypto.
So they don't have any crypto. And let's just say, so just so that the math is easy, right? Let's just say that they can put away $100 a month. Like after they pay the bills, after all this bullshit, inflation, everything, they have an extra $100 that they can invest in the crypto market.
Sure.
So what would you suggest? If you, we cannot give out financial advice, but when you are in that situation, what would you do?
If I had no crypto,
and you only had an extra $100,
and I had $100, like I would start buying now. Like if I had zero crypto, all right, then I would buy in now, understanding that in the near term I could lose more, right? Like it's going lower. So my $100.
But when it goes lower, you just buy another $100.
But you have none, right? And you're like, okay, I can buy $100 now, and because, bull markets, bear markets last. I mean, they've lasted about a year. Okay, and we're already coming up in a year. The top was back in November, I believe. Right.
And if you count November of 2021, then it's even more than a year.
So it's been a year, right? And that's historically, and that doesn't mean we can't go lower or that we've seen the lows.
Okay, so every paycheck, every month, just buy 100.
If you have no crypto, and if you have zero crypto now, then no, I don't think it's too early.
I mean, you buy early 1 month or 2 months.
Most of our viewers already have some. Right?
So $100 and start buying. Right. And obviously, we would, you and I, if we were in that same situation, we'd buy Bitcoin first. Because it's the only coin that's proven to go through 80-90%
drawdown
crash and then come back up and set new highs.
Yes, that's right. It has the most liquidity. It's got
hardware wallets.
It's got the most support. Every exchange trades it. You know.
We know it's not a security. We know it's not a scam. So there's a lot more resources for it. Okay. So that's someone who has never had crypto before in their life. Okay. Let's take another case study or another example of someone that they came in late to crypto in 2021. And they still have some crypto that they bought, maybe Bitcoin at 50,000 or 60,000, and they didn't sell anything. Right? So now it's down 70, 80%.
60, 70, 80%.
Okay. So, and they have an extra $100 each month. So what would you do if you were in that situation?
Well, let's just say, if they have $100 a month, then how much crypto give me we need another number. How much crypto,
so if they bought in late, if they bought in late, let's just say they have like $10,000.
$10,000.
Because they're beginning.
If they have $10,000, well, it depends on how much.
Or less than 100,000. Less than 100,000.
Less than 100,000. All right. Well, let's say they have a total. Their net worth is 100,000. Let's just make it like this. Out of that 100,000, how many Bitcoins do they already have? Let's set that scenario.
Let's say they have 2 Bitcoins.
So that's 40,000.
40,000.
40,000. So they have a 40% position size. I would not add. I would wait.
I would wait till January.
In fact, you know what? If you're saying your net worth is 100,000 and you have 40,000 in Bitcoin already, I don't really think you need any more crypto because that's a 40% position size. Right? Like the other 60,000 is like for your emergency fund, or it's to diversify. It's for other things. Right? It's
because we don't know what this inflation and all the interest rates.
Okay, so let's just say 40% of your money is in crypto already. Right? Then you know what? I wouldn't be in any hurry because if you miss it, let's just say the bottom was last July. 17,000 was the bottom, and we're not going to see that again. Right? But you already have 40% of your money in Bitcoin. Right? There's no need for you to add
more risk
at that point.
Because one thing that you and I have learned after 2017 that many of our students did not do is that they didn't put money aside ride to have peace of mind.
That's right.
Meaning that it's really hard for you to make accurate decisions when your mind is mentally stressed out.
That's right.
So
if you already have 40%, if 40% or more of your net worth is in crypto already, then I don't think there's no need to buy right now.
Okay.
Right? There's really no need to, like, you're going to make tons of money on the way up, right? If Bitcoin gets to 100,000, 500,000, right? Like, if, let's say we go back to, we hit 100,000, that's a 5x from here.
Yeah.
Your 40,000 times 5 is now 200,000.
Yeah.
Right? Mm-hmm. So you've already 5x.
That's life-changing.
That's life-changing already. You don't need to put any more in.
Yeah.
Right?
Okay.
And what is $100 a month going to do? Nothing.
Yeah.
Right?
Okay.
But if you have 40,000 and you have an extra 100,000 a month, what is adding $100 a month going to do if you already have 40,000?
Okay.
It's not going to materially change anything.
Yeah. I'm going to say this too, right? So that I recommend that before investing into crypto, that a single person should put away 6 months worth of living expenses.
That's right.
So let's say the living expenses is, let's just say $3,000 a month, right? 3 times 6 is 18,000.
That's right.
Put that aside. And if you have a girlfriend or a wife that you have to take care of, one more person you have to care for, I would add another 3 months.
Yeah.
And if you have a child, another 3 months.
Yeah. So a year. We're talking about like a year.
Yeah. Yeah. So if you have like you, your wife, and one child, so you 6 months, 3 months, 3 months, right? So that's about 1 year worth of living expenses set aside, and that's not for investing, that's just to pay for living expenses.
And I would only say that is if you have a job.
Yeah.
Okay. If you don't have, if you're retired like us, I would even say put away 5 years, put away 10 years.
Yeah. Yeah.
Right? Because you have no more money coming in.
Yeah.
So that's what I've done. Right?
Most of us have done.
You know, we've put away over a decade worth of living expenses, right? And or more, right?
Yeah, several decades
of living expenses. That's why we're retired. But I think minimum, I would say 1 year.
Yeah.
If you're still working.
Yeah, and that's a starting point.
Yeah.
Like obviously it can be changed. Like obviously if your child has Down syndrome or you have medical concerns or something, you might want to increase that 3 months to 6 months or 12 months. But at least have something so you have peace of mind.
That's right.
So you're not, don't take all your money and just put it into crypto.
Because look, if what happens in a recession, people say that it's not just your investments that go down. A lot of people are going to lose your job. That's when you got to remember, it's not just the market that goes down. There's a high probability. I mean, unless you're like working for the government or something, right? Like if you're in the military or you're a public school, you're a public employee, then
they just print more money.
They just print more money to pay you, right? But for the rest of us who work in the private sector, like look at all these layoffs that are happening, right? So 1 year is like the minimum because
the reason why I'm saying that people need to put away some money for to pay for their living expenses while they invest is because a lot of people will hear me say that, hey man, you need to put all your money into crypto. But what they don't hear is when I say put all your money that have you extra after you put away your 1 year worth of living expenses.
That's
right. Take anything extra you have and put it into crypto. And people think, oh, I don't have any money saved up. I don't have $1 in my bank account. I have this extra $100, right? I'm just gonna put it all into crypto. That's not how it works.
No, that's not how it works. No, no, you're not. You're going to be stressed out. You're not going to make good decisions, and living your life based on what the market does is not the way to live.
It's very stressful.
Yeah, it's very stressful, and you don't want your life being dictated by the markets. Like what you do, whether you take a vacation, whether you go out to eat. Like that's just not the way to live.
Okay. Okay. So last one is obviously the students that followed us for several years now and took our enrolled in our cryptocurrency investing blueprint course, and they understand when to buy in and they understand when to sell and take profits and stuff. And those students, we have several students like that around the world that are retired now.
Yes.
And they still have money in the crypto crypto market in open positions. Obviously, it's gone down 70, 80%.
Yeah.
But they still have a decent sized crypto portfolio in the crypto market. And they took out enough money to retire for the next 10 to 20 years.
That's right.
Okay.
That's right.
So for those students, I think that it's just better they just wait till January and then start buying in a little bit at a time.
Yeah. If you already have a sizable position, even after the 70% drawdown that we've 70-80%, whether it was Bitcoin or I think Ethereum is down 80. I don't have the statistics in front of me, right?
Yeah.
But it's 70, 80, 90%. Everyone's down that much.
Yeah.
The money that we didn't take out. But if it's still a substantial portion compared to what you've already have taken out, there's no rush to jump back in, right?
Yeah.
Because even if you miss the bottom, so what? Right?
Yeah.
You already have
a decent
chunk in there already. Yeah. You already have. It's like, what is the, we've talked about the marginal utility, and that's the way you need to look at it.
Okay.
You need to look at like, what is the value of 10xing this money versus losing this dollar? What's the value?
Let's make a separate video at another time about the marginal utility of money, because that's a lengthy subject.
Topic, yeah.
So, okay, anything else you want to add before we end this video?
Let's end it. Yeah, let's end it. That's long enough.
So, thanks for watching this video, guys. I hope that what we shared with you guys about our understanding of how the interest rates are affecting the entire the world economy, and when we plan to buy back in, and I hope that it helps you guys out. Thanks for watching this video, and make sure that you follow me on Twitter at HeyTaiZen, and then on Twitter your handle is what?
Leon Seafood.
Okay. At Leon, the letter C, and Fu, F-U. Okay. All right. And
watch out for scammers. There's impersonators all over.
There's people impersonating us all the time.
I'm never going to ask you for money, and there's no way. I don't even know how many impersonators are. I'm blocked from all of them, right? So
there's a bunch of people impersonating us, so be careful about that, guys. There's absolutely no reason for us to ask you guys for money. We make our money from trading and investing in crypto. Okay. If you guys like what we have shared with you guys, and you guys want to learn more about the system that we use to make life-changing profits in the crypto market, you are welcome to go check out and get a copy of our cryptocurrency investing blueprint at www.cryptocurrency.market/blueprint. In my opinion, that is the absolute best training for anyone that wants to grow their money into a 7, 8, and 9-figure portfolio. All right. Thanks for watching this video, and I'll look forward to seeing you guys in a future video. Thank you.